Yes, sir. Well, back at it again. Hey, going through, market annihilation, the crazy ups and downs. Ape currently sitting up 11% on the day currently. Um, market turmoil is ahead of us. We got the Silicon Valley Bank, Joe Biden, a couple key points, things I want to hit on at the end here. That's just kind of like, things that we should pay attention to. Like I said, y'all saw Tesla is bottoming out, like I mentioned in the last video, guys. I don't think they have this under control. A part of me wants to say this is, well, don't get me wrong, this was expected, but a part of me thinks that this can get out of control. So, let's just double check. Hey, y'all watch this video first, and we'll tap in at the end with the keynotes.
Weekend of worry. That is not how it played out. HSBC actually acquired the UK assets, the British assets of Silicon Valley Bank. But for the Silicon Valley Bank, emergency measures were used, and we are talking about that this morning. That was the House Speaker, Kevin McCarthy, joining me yesterday on Sunday Morning Futures, reacting to the country's second largest bank failure in Silicon Valley Bank. Joining me right now is the Bear Traps Report founder, New York Times bestselling author Larry McDonald. And Larry, it's great to have you this morning. Thanks.
Second largest, and we had another one today.
Thanks very much for being here. I want to get your take on these emergency measures. How do you see things?
Well, first, let's back up a second. When you suppress...
and before we go in this, guys, mind y'all, Biden came on today and had a press conference, basically flat out lying, saying that, taxpayers aren't going to be the one to foot the bill for, basically, which was a step back on yesterday's comment from Yellen that there was going to be no bailout, and they went around and bailed out. But we'll get back in those keynotes at the end here. Let's just finish the video. I got some steam to get off.
The cost of capital for longer and longer and longer periods of time, you incentivize bad behavior. And as you know, I wrote the book on Lehman Brothers. It was a New York Times bestseller. And what I saw inside of Lehman and what we've just learned over the weekend as to the way this bank was managing itself, it's blood curdling, irresponsibility. And the Fed enabled it. And then when they juiced rates up higher, they essentially just blowing up these bad actors.
So they're claiming that this is not a bailout, Larry, because the bondholders and the stockholders are wiped out.
He's shooting it straight now. He's shooting everything straight.
Taxpayers are not paying for this. This is money from the fund, the fund which banks pay into. What about these emergency responses? Is this like another introduction or form of quantitative easing, Larry? Because it feels like that's where the conversation on Wall Street is going now. That we just saw a second major bank failure, and now the Fed is not going to be able to raise rates the way a lot of people thought. Assess this response from regulators.
Well, they're socializing the losses. So they suppress the cost of capital. They incentivize bad actors, and now they're socializing the losses. Because at the end of the day, the Fed is backstopping this, and essentially QT, which they promised us would be $90 billion a month, essentially is over, because this is the Federal Reserve using its balance sheet to socialize the losses and provide liquidity to potentially lots of banks. There are a number of banks this morning that are down 50-60%
for all the banks.
This has got a knock-on effect. They've basically used a Band-Aid, but it's clearly a risk to the taxpayer, because at the end of the day, the taxpayer backs up the Federal Reserve.
So, Larry, you see this as a bailout?
100%. Well, just look at the COVID crisis. It was a $10 trillion fiscal and monetary response. Okay, and the Lehman crisis was only $2.5 trillion. And now we're going into another round of bailouts, socializing the losses with the Fed balance sheet, right? And so your hard assets are going to be an incredible place to invest, because the dollar's weakening globally as the U.S. is moving toward recession. This uncertainty. And
people, if you're not starting your crypto accounts and loading up on your XRP or Cordanas or whatever you're going to do, guys, they're about to push us to digital currency. Quick with it. 2008 to 2020 to here we are, a bailout city, another plot, huh? Come on now.
And these bank runs
What is
nearly
this?
guarantee a deep recession.
These banks
And
have
then
been
and then
down
eventually
bad.
the taxpayer is going to have to come up with
How can you
more
come out
when
at
they do
the
a
end when you
real
collapse out
fiscal
and
bailout. Right
say
now
the
we're in
gig's
the
up?
monetary
Shows
bailout.
been tell your clientele that.
Larry, you made a lot of news the other day when you
CEOs
joined me
selling
last
out
week.
right
You
before the
said
bank
that
collapses. What are we
based
doing
on
here?
what your research is telling you and based on your calls with various institutions, that stocks would, you use this word, crash within 60 days. Ever since you said that, Larry, this market has been underwater.
Winter's coming.
We're talking about declines of between 3 and 3.5%. Since you made that call, how much worse does it get, Larry?
Well, we were on the program last week, and all I was pointing out to is that when you look at the yield curve of the 2s, 10s, and that's just looking at where the 2-year Treasury is versus the 10-year, that was ominous. But then the performance of the regional banks, the underperformance has been spectacular. It's been growing weaker. And when you have this kind of dislocation where the banks are in trouble on a regional basis, it just leads to much bigger problems. And then we're not even talking about auto loans and commercial real estate.
Yo,
so it's going to be a really bad, kind of like an SNL 1980s type.
Everybody hear that now, guys. We've all been sitting up here talking about this. The housing market's about to get smacked. All these bad loans that they were just giving out to any and everybody like it was pieces of cherry on ice cream. This is all coming back. I don't know if this whole thing was set up. The bailout they were going to need a bailout of some sort. These banks ran through this. They knew 4 months ago when they pushed those margin requirements back to October that these things were going down. But yet they're sitting up there, oh, everything is good. Everything's good. Okay.
Crisis.
All right.
The market
should sound familiar to what y'all are getting from your press releases.
30% from here, because at the end of the day, Maria, we're trading at 19 times earnings, and we have like literally 4 banks that have blown up in the last week. We've got one more on the way, probably today or tomorrow.
Okay, and I saw your tweet over the weekend about those regionals. You said that you shared this with your client, that all the signs were there. The regional banks were underperforming the S&P 500 by 19% year over year today versus 9% 9 days ago. So you're saying that indicator alone would have had you be selling regional banks weeks ago?
Yes, and we have our index. We've got our 21 Lehman systemic risk indicators.
Big money's known.
And there's a number of things that have been deteriorating in terms of interbank trust, credit spreads on commercial real estate. I mean, it's just so many things have been deteriorating. Auto loans. So all the bank assets are in trouble. And the problem is the highest quality assets, right? So not all bank assets. What I mean is, your auto loans, your commercial real estate, there's a lot of things that are in trouble on bank balance sheets. But your highest quality assets, your treasuries and your mortgage-backed securities, just got really lit up in flames by the Federal Reserve hiking rates 500 basis points inside of 14 months. Okay. And remember, when you have these guests on the air, right, they've been claiming that, okay, soft landing, no landing, and they're basically selling us, this is Wall Street strategists, that you can just hike 500 basis points in 14 months, and there's a price to pay for that. I mean, this is not free, because when you raise interest rates that fast, you essentially light the high-quality assets of these banks on fire.
That Yale.
All right, we will leave it there. Larry, you just said that this market is having another 20 to 30% fall from here, and you think this emergency response from the Fed is, in fact, a bailout. Larry, it's good to have you on the program. Please come back soon. We'll be watching your moves and your approach to this market.
All right, guys, man. Let me tap in just with some keynotes at the end here. Obviously, everybody's watching. As I mentioned in the last video of the prep, I knew this thing was going to be something wicked coming in. And all this in lieu of tomorrow, we have the vote for AMC Ape, which, guys, if we can't, it's going to be a yes. If this was a no vote tomorrow, that would be checkmate. They're not going to let a checkmate happen like that. I'm sorry. Every time it's checkmate, pop up, here's Ape. They have to. If they don't, it's over. It's toast or strudel for them. Ape is already, like I said, up 11% the last time I looked. things are starting to get interesting. Just some keynotes in. Signature Bank was seized today, holding over $110 billion of assets. Jesus. Everybody's got their eyes on the next bank being the First Republic Bank. We're just watching this stuff, guys, because like I said, these are things to be mindful over. If anybody watched Biden's speech, basically, it was fluff around, same as what Janet Yellen had. But basically, they've done a bailout counter to what she said that they were going to do. And the means of how they're doing the bailout is they've just opened up a $25 billion facility where they're going to let these banks come and exchange bad or toxic assets or bad loans, bad bets in for what the true value is when they bought it. Then they said that's not going to be the American people paying for that, American citizens paying for that. Guys, first off, the government money is your money. The government don't got no money. That money that the government has is your money. That's what we give them. So I mean, the whole spinoff here is just going sideways in the loop, and I'm starting to think that this might be drastically worse than what they're letting on. One, because the fact that the Fed was moving on Sunday to seize banks and get these press releases out here. Oh yeah, this might be a black swan event, and like I said, not even black swan event. The start of winter, baby. But let's see. SVD, as they mentioned, was bought by a smaller UK branch. So there's a UK bank that's taking over SVB. Treasury notes that took a massive beating this morning on the 2 and 5 years they were showing up there, which is just basically in lieu. Market signaling is a recession. Everybody, you should know what's coming on. Recession's coming on. Things are getting tight. This is good for those that are in what they would call speculative momentum stocks. But like I said, everybody, you need to have your head on a pivot. Let's see here. I had a side note down here. Basically, it was on speaking on Biden. I said Biden came out today noting financial institute is fine. Basically, everything's okay. Everything's fine. Automatically, then I know it's not fine. All right. He looked shocked, confused, like he didn't want to be there. It sends a statement that banks now, based off of how they're setting up this $25 billion thing and saying that banks are paying an interest rate, they're going to pay an interest that's going to pay for all this money. No, they're not. But this is just basically setting up a sentiment to all banks that they can get bailed out. But yet investors are smoked and the employees are fired. Keeping it quick. Let's see here. 90% of all bank markets were getting smoked and have been smoked all throughout the day. So keep your eyes on that if you're holding any of those bank stocks. But also, like I said, that could provide opportunities for momentum. We don't know. It's just a point where we're watching this day by day to see how this interacts. Like I mentioned, we have the AMC vote tomorrow on the 14th. Guys, I'm not here to argue if you should vote yes, vote no. I voted no. Not that it matters, but guys, they're gonna, this dilution that's gonna come is gonna equal out to 1 billion apes before they consolidate down to 6. What was it? 6? Was it 516 or? Let me see here. Hold up. So it'll be 115.8 million-ish shares of AMC. But my question comes down to, if they have to sell these shares to make money, what do you think's coming next after the dilution? I mean, because they're not consolidating shares down and then not selling them. Guys, we're going to have a window of time coming up on our squeeze here. This is not going to be no hold forever. You hold too long, you're going to get smoked. That's all I'm going to tell you. Just end it off. Cost to borrow, 300, still above 300%. SI, short interest above 25%, which is, again, insane. And then AMC is still on the threshold list. Guys, we're in the middle of something major here. All I'm going to keep screaming is XRP, XRP, XRP. And And then I'm also going to scream Tesla and some of these growth stocks that are just high on capital that you know are going to take over. This is the greatest generational wealth transfer that's happened in front of us, people. Right in front of you. A debacle. Another debacle. Oh, my. All right, hey, appreciate y'all for stopping in. Hey, you know, we're going to keep bringing them. I appreciate all the support. Hey, if you like the content, please subscribe and like. I'm trying to run it up, run it up. Now you got a song for me. Hey, but like I said, hey, I appreciate y'all boys, and we'll be back with another one. All righty.